Well, hello, traders and investors. I'm LA Little, and this is your weekly NeoTA wrap. Taking a look at these markets from a neoclassical perspective, and that means each time we ask ourselves what happened last week, what does it tell us about the coming ones? Do this show every Sunday evening broadcast at or before 10 o'clock Eastern Time. It's archived on YouTube, and it's under the channel LA Little. If you want to subscribe, reach up in the right-hand corner, do so. Anytime I push content, you'll get a notification. Keeps you up to date with what's going on, and in these markets, you kind of need to do that. As far as what happened last week, I've got the daily returns up here on the week. Actually on Friday, right? You had a big push on oil. Got some follow through looking like it's going to happen there. I don't know how much higher it's going to get, but right now you got the momentum. You had gold actually finish down. Gold stocks were up. You had the DAX finish up. And you actually had the NDX was the only index down, but what I'm going to show you is going to show you that that probably is not what you want to be looking at. Dollar was down again, and that was about it, right? Not much else happening. If we go, well, I guess we had the Nikkei down. If we go to the equity markets here and look at the returns on the week, down 2% on the Russell, 1.2, 1.3. So you basically took away what you lost last week. Let's take a look at these markets, and let me show you what's happening here. And what we left off on Thursday, if you remember, is we were talking about the a reversal of a reversal, right? So we had a what I call a takeaway bar, and essentially you get a trade down, right? Then you take that away, right? Go back the other way, and then you take away the takeaway, right? And that doesn't happen very often. And if you kind of go back and look at the places, even on this chart, where you had a pullback, right? You got a reversal signal on the very next bar. And again, here, reversal signal 1 bar later. Again here, same thing, right? Again here, each one of those. So all 4 of these attempts as this market moved higher were different patterns. Now you get it, and you get that takeaway just like you've seen before, but then they take away the takeaway. Uh-oh. That's not good. And then Friday, to kick it off on Friday, you start higher, and then you give it all up. You close near the lows, and this thing's getting ready to break down. So the confirmation on Friday, in my opinion, was there, and that is that this market is ready to try to roll and try to head down on the week. If you look at it on the weekly, you don't have an over-under or anything like that. You had it back here. It didn't matter. You pushed up anyway. You come up close to that swing point high, don't quite get to it. 2081, you get as high as 2075, and you fall short. If you look at it on a monthly, we haven't talked about the monthly here in a while, but if you look at it on the monthly, right, you still have this big range that's in effect, right? And that range hasn't changed. It's been that way ever since 2014, the beginning of the year. Actually, even the late part of the year, 2014. We're talking about December 2000. It actually was the full year. So December 2013, you were at this level, the levels that we reached here in February, late January, early February, and then we pushed straight back up. So the range remains in effect on the U.S. markets, and that's true whether you're looking at the S&P 500, whether you're looking at the NASDAQ. Here's the NASDAQ, which also has the takeaway of a takeaway. Pull it back, look at it on a monthly. You come up to the breakdown bar's top. 4926 is that number. You trade up to 4917. You start to pull back. If you look at it on the monthly chart, again, big range, wide range, still in that range. If we look at the NDX, right, you got the same picture, takeaway of a takeaway. On the dailies, you got the breakdown bar, you trade to it. Now you're starting to try to give it back up. And you got the same thing here on the monthly. Finally, the small caps, the Russell. The Russell does the same thing on the daily. And so picture this now. We haven't talked about this in quite a while. We actually have the same setup on all the indexes. We haven't had a congruent setup this entire move higher. We had a mixed signal here, a mixed signal there, but we haven't had all the indexes give us the same signal. And in this case, they're all telling us that they want to try to come back down. The Russell doesn't even make it to the top of the breakdown bar, and the Russell is the only one that has expanded that range. So rather than holding that October low, which the Russell tried to do, the Russell actually made a lower low, and so we actually have a lower range on the Russell. And if we do start to come back the other way, it's going to be a key area to keep your eyes peeled on, because the Russell has been given the best signals overall. Now, a big part of what's going on out here is in the currency markets. And so if I pull over, take a look at the currencies, I'll start here with the Japanese yen, because that's the one that's making the waves. You've got a lot of short covering. Look at the huge volume spike as this thing broke out. And when I'm talking about broke out, multiple swing point highs right here on the daily chart, right? So you break over those, right? The volume expands and you get the escalation to the top side. If you pull this back and look at it on a weekly, that's that same area. You break over it, volume expands, escalation to the top side. And if you look at it here on the monthly, what this thing is trying to do is come all the way back up to the swing point low and do a bearish retest regen, and I suspect it's going to get there before it's over. When you get fast moves, especially counter to what everybody thinks in the currency markets, it usually spills over to equities. And if we look over at the euro, right, the euro's been struggling with the European markets have been struggling with a stronger euro. Euro is up here consolidating at the highs, folks. And if we look at it back here, that swing point high got over it. You did get an over-under, but you had more volume. That says it's going to try some more. And you go back to here, you're right at the top of this range. And if you flip this over and look at the dollar, it's the exact opposite. You're right at the top of the range on this monthly chart. If this thing gets over this, it's going to do the same thing the yen's doing, and it's going to try to come all the way back up to do a bearish retest regen. So if we see that, you're going to see these equities in Europe come under some significant pressure. And it's not as if they haven't already. If we flip over and look at those indexes, right, you do have that already happening on these equities. And I was showing the members today on the weekend member show that I do exclusively for them, how you have some significant losses in these indexes. And I'm pulling up the Shanghai. Look at the size of these losses on the way down. That top was 51, almost 52. You trade all the way back down to 26, folks. You give it all up, 50% of it, all the way back down. And I know there's a lot of folks thinking that maybe this is the turn. Yeah, maybe it is, maybe it isn't. You know, I wouldn't get too excited here because, you know, when I look at this long-term chart, this to me looks like an ABCD structure to the downside. You got the A point up there, you got the B point right there, C point is on that push back up, D point is way down here, back where you started. And so don't assume that these markets are going to trade back higher necessarily. They may not. And you got probably what is a nested ABCD structure inside that big one I just showed you. Both of them are going to point about to the same spot. That's Shanghai. Nikkei, I don't have to tell you about, with the yen as strong as it is. The Nikkei is getting hammered on the downside, comes into the top. And if you want to understand neoclassical, just remember this. I mean, there's a few fundamental concepts that happen over and over and over. One of them is when you make a high volume low. It doesn't even have to be a high volume low, but usually they are. You make a high volume low, the top of that low becomes the first key trade to target. And look at what the Nikkei did on the daily. Went right to that target, hits into it, right, extension down. It's going to try to bounce from here. Once it bounces, expect it to come right back down. I was going to show you I came over to show you the DAX. If we look at the DAX, you know, we have central bankers trying to push this thing around, but it's not working, folks. They came down, they tested that big bar. They didn't have enough volume right here. They got a little bounce. Maybe they'll get a little bit more of a bounce. But if that euro starts to break out like we talked about, you actually have ABCD structures here that pretty much just completed, right? Almost, or probably a little bit more than completed. If I tighten this up to where it's about the exact same size, it's about there. That just about completed. You're getting a bounce off of it. If you come back up, you can't recapture, say 9,700, maybe 9,750. You're probably going to head right back down, try to break it. And that's the Draghi bar. That's when Draghi told us he's going to give us all this money and he's going to make things happen. Well, the market is saying otherwise. If you looked at the yen, the market is saying otherwise there, and the Nikkei. Folks, I wonder if these central bankers are starting to lose their grip on these markets. Look for a tough week this week. I think it's going to be tough. You got earnings starting to happen. You got central bankers next week. Well, actually, you got the British bank this week, but nobody expects anything. You got the ECB again next week. You got the Fed the week after, and you got all these earnings starting to spill over, starting with the financials and a few other ones this week. If they don't buy the story that these earnings, well, not so much the earnings, but what's going to happen next, right? The predictions by the companies, what's the next quarter look like? If those don't juice the market, this market's going to tailspin right back the other way. Have a great one. Thanks for joining me. Tell a friend, tell two. Join me. Come to TA today. Get started, folks. I mean, I give great trades. We had a 25% gain on VRX in 4 days last week. And you don't always get those, but you got to be ready and you got to be looking. And I share those with members on a real-time basis when they're happening. Have a portfolio, I share them in. I also have comments, I share them. Show them good trades, show them how to trade. I actually have a mentoring program now that we're about to start rolling out where you can learn neoclassical for as little as $15 a month. I mean, you can't beat it. Join me. Have a great one. Take care. Good night.